The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk about taxes. And I'll tell you, we're in the last quarter. The extensions were over a couple weeks ago. We're really looking down the pike here to 2018, and we will keep you abreast as to whatever's happening in Washington so that you'll know, even though many of your friends won't know, especially because you listen to Ask the Tax Lady. I'm joined in studio with Chris Fabian. Hey, Christopher.
Hello, Esther.
Hello, Christopher, and Tiffany Fabian.
Hey there, Esther. I was listening to public radio the other day, and they said they're hoping by Thanksgiving to have something to present to Congress, you know.
Right, I think they're going to be fiercely debating it right now, from what I can tell. And then we're going to talk about that, the changes in the tax law. We're going to talk about the things that are good about it, the things that are not so good about it, especially if you're in a high tax state like New York State. It's definitely going to be not good for many people that live here in New York State, Western New York. And we're going to talk about some of the other things that they're proposing. And what's some things that people should know that's happening at EG Tax, you guys?
Well, open enrollment is right now for Medicare. So if you're a Medicare Advantage person, you can come to our office and you can have the pleasure of having Mike and Glenn and his team, or Tim Eliason. He's also a Medicare person who can sign you up for Medicare. And, you know, I just want to say it's really important that you pick the right plan. You know, there's Chris's mom is on Medicare, and there's that donut hole, and there's all these matters, and Tim and Mike and Glenn's team are experts, and so you should really make sure that you don't haphazardly make that decision.
What people don't realize, and I don't want to spend a lot of time talking about Medicare, but what people don't realize is that they can be paying for an insurance policy that is not pertinent to their own situation. So what Tim and the financial guys do is they basically get into your
life
medical history and find out how many drugs you're taking, what the drugs are, when you go to the doctor, so that they can match you up with a policy. And it may be that you should do a Medicare Advantage plan as opposed to maybe Blue Cross Blue Shield. And those are things that and the bottom line is it saves you money. And
yeah.
So if you're interested, they can call the office at 632-7886, right?
Yep.
And
go to our website at egtax.com. I know sometimes if you're a senior, you're not, you're kind of electronically challenged, so we still answer the phones, but we really want to help you because you don't want to pay for something that you don't need.
Yep.
You know, that'd be like getting a car and sitting it in the driveway. You're making a payment every month, but you never drive the car, right? So so there's that. And then what else is happening? I believe school was first day of our last school.
Well, Chris,
today.
you're saying something?
Yep. School, our last class started today, but we do got the online class if there's still people out there interested. We can make room online. There's always room online. So, and you can do it in your pajamas, as Esther always says.
So what we do is we teach you everything about taxes, way too much than you can grasp. But I will tell you, you'll come out of the tax course with, if you stick to it, with a really good working knowledge. You know, there's so many things being bantered around right now. You don't know what to believe.
Yeah.
And, you know, you'll actually see the evidence yourself. You put the computer to the problem and you say, oh my gosh, I had no idea. Right?
Yeah, and the hope is that you will come and be one of our employees. And then also, hope it's okay to say, really exciting, one of our new franchise owners is now committed and in the bag. And so Lewiston, New York, we're so excited.
That's great for the people up at the very top of the state. Wonderful franchise owner in Lewiston. And
And then we have
so right over by Bank of America, his office is.
Yep,
right?
and we have a grand opening celebration January 13th. You might have to bring your knickers, but we're doing
Your
a remote knickers. I don't know. Is that a good way of saying that?
I think your knickers are short pants. So do you want to wear short pants?
No, something warm.
Mucklucks.
Mucklucks. Okay, thank you. And we're going to do an open remote there, and so we're going to have apple
No,
cider.
next week, are we doing an open remote with the financial guys?
We are. We're going to be live at their seminar, their
Financial
financial
forum.
seminar, their financial forum. That's going to go on at the.
In Amherst at the
We're pointing to it as people in radio can see. We're pointing to the hotel, the Marriott.
off of the
I
Millersport,
was gonna say.
off of the Millersport, right, Chris?
Yes, the Marriott,
The Marriott.
Right.
right off the Millersport. So we'll be
And
there.
I'll tell you, it is absolutely imperative that, I mean, I believe there's no charge for the seminar, correct?
Correct.
And so you get all this information, and you get to talk to the experts yourself, which is so important. Many times people say, I would really like to call you, but I don't know if somebody will recognize my voice. But you can come and talk one-on-one, and we'd love to meet you. So if you are somebody that's interested, we're going to be there. The financial guys are going to be there, all host of experts. And you can call Mike and Glenn's phone number at
633-1515.
Right. Okay.
Yep.
All right. The other thing is that we want to talk about is this being the last quarter. If you still have tax liabilities from last year and you still haven't paid the liabilities and you're unable to do it, EG Tax can help you to set up a payment program. We have our very own offers and compromise attorney that works with us. You can call him. And if you're unable to pay, they do accept payment pennies on the dollar.
They do. That's really known as an offer and compromise, and they really do.
Right. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say. Okay, when I was listening to the financial guys just before we got on, I think Glenn was talking about the elimination of the 401k deduction. Now, so you got to pay attention. I'm going to tell you something. The 401k deduction is a gigantic write-off for people at the time they're making money, which then becomes taxed later in life when you don't make as much money. So in a typical 401k deduction, if they take away this deduction and you're in the 25% bracket and you're putting away $20,000 a year into the 401k, it would cost you an extra $6,600 in taxes. Now, we're not talking about a deduction. I'm telling you that you would pay an extra $6,600 in income taxes next year. That's over $500 a month. That's something that should make you perk up and pay
It
attention.
makes me unhappy.
Yeah, it makes me unhappy too, because who can afford $6,600 extra a year?
Right, and that's not to mention how about if they're with increasing their income, their credits will be getting, could be limited. Their adjustments could be
So
limited.
what they're really trying to do is make this revenue neutral. So they're chopping down the taxes at the top. And I know Glenn was saying that they don't have the right to our money, and maybe they don't, but I like it that we have a federal government, and I don't mind paying my fair share in taxes, okay? What bothers me is that they've got the people in the middle class with children that work in high tax states like New York State. I know they say we should all move. I don't know if that's much of a solution to.
Yeah, wasn't that in a debate
deduction.
you heard?
Yeah, I mean, they said, they as a matter of fact, I was having dinner last night with some friends from Florida, and they said, well, why should we subsidize people from New York State because you guys pay so much? But we're here, and we work here, and we live here, and we all can't move to Florida,
Well, wait. It's not subsidizing us. It's subsidizing New York City. But that's a story for another
Well,
day.
that's true. That's true. Too. So let's talk about some of the things that are coming down that they're proposing, who it affects, and you'd be surprised. People can hear me say the itemized deductions are almost eliminated, and it's true, and people don't understand what that means. So we'll talk about that on the other side of the break. 8030930, 8030930, star 930 on a cell phone. We'll be there back with your phone calls, your comments on the other side of the break. I'm Esther Golias, the tax lady.
Virginia, don't any wait. You
Tax Lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. Let's dig into some of the things that they're proposing to change. All right, so let's say I'm an outside salesperson, right? I
Okay.
go from place to place to place all day long. Maybe I'm selling invisible fences, whatever, you know. And so I use my car. The company gives me maybe a flat rate. It's included in my W-2. But I count on being able to deduct those expenses that I incur as an itemized deduction because it saves me money. Will that be deductible for these people in the event this is changed?
No, nope. The proposal says nope, that will not be deductible for those individuals. Sad.
So a guy, let's say, traveling 15,000 miles, who buys lunches, dinners, cell phone, he might have, making $75,000, he would end up with like $10,000 in non-deductible reimbursed expenses. In the 12% bracket, 8% New York State, it would cost him $2,000 extra in taxes. So now couple that with the extra 401k that he can't deduct, right?
Yep.
Now you're looking at maybe $8,000 extra in taxes that this person
And he can't deduct his, if he owns a home, his property taxes or his
the New
state
York
withholding.
State taxes,
Yep.
right? Sales taxes, all that would be gone, right? And so these are some of the things. If you are somebody that has medical bills and maybe somebody's in a nursing home, not deductible if this passes. Your property taxes, your sales taxes, your New York State taxes that you pay, gone.
Yep.
So I think you're right, Esther, when you say couple it with everything, it really poses a problem.
Right, and that doesn't even, and your children. Another thing that nobody's talked about, the standard deduction that they're proposing, the $24,000, everybody goes, oh, $24,000, great. Well, right now, the standard deduction is $13,000, but you get to take your personal exemptions with that. So that's $8,200. So now that's $21,200. Oh, so it's not such a big deal. And if you're over 65, you lose the other $2,500 over 65. So the standard deduction for seniors were $23,700. Wow, they're moving it to $24,000. That's $300 in the 10% bracket. That saved you $30, right?
Yep.
But God forbid your family goes into a nursing home and you were paying all these nursing home expenses, not deductible. Property taxes, not deductible. The interest that you might pay your broker on a margin account, not deductible. You know, and if nobody's said the details yet, and that's what they're going to be working on. If the standard deduction does go to $24,000, I'm assuming that even though they're allowing you to take charity and a mortgage interest, that would have to exceed $24,000 in order, because of standard deduction, to be deductible. So who do you know that gives over $24,000 to charity?
Not that many people.
So it's unbelievable. It's just unbelievable. Why don't we go? The phone's 8030930, 8030930, star 930 on a cell phone, and I think we have Jerry on the phones. Hey, Jerry.
Hi, how you doing this afternoon?
Good.
Listen, I want to shout out to all my ride-sharing brothers and sisters that are listening with me driving around Western New York today. It occurred to me that we might need some guidance on what we can deduct for Uber and Lyft. Can we deduct meals? Can we deduct parking? What are some things we should be thinking about?
All right, so you're self-employed, correct?
Well, I have a job, a full-time.
No, I mean, but when you're doing your Lyft or Uber, they send you a gross check, correct, every month?
Well, every week they deduct it into my paycheck, but they don't hold anything out.
Yep,
Okay,
so he's
it's
self-employed.
It's a gross check. So you're self-employed. So what is deductible when you're self-employed are all the expenses, ordinary and necessary, to produce the income, such as, Chris, Tiff?
Such as your mileage. You want to keep very good track of your mileage. If you go over Grand Island tolls or you take someone to Rochester, those tolls are definitely deductible. Your cell phone, your special apps that you need, if it costs you money to purchase some apps, those are deductible. Your
Cleaning supplies because you have to keep your car clean.
Yep.
That would be to keep the inside of the car clean.
His
you want to
cell
keep it
phone.
professional. Yeah, he said cell phone.
Oh, you did
but not your meals.
Right.
Meals are only deductible if you travel outside of your general tax home and you have to spend the night.
And if you-
or if now that doesn't mean that if you provide donuts to your riders, that would be deductible, or maybe soft drinks or
Bottled water.
Right, that would be deductible,
And-
but it would be anything ordinary and necessary for you to be a successful Uber driver, but not your own meals.
And I think, Jerry, you're really smart for planning. So make sure you're keeping really good account of all of your expenses, money in, money out.
Now,
And
something that you want to know is our new app is going to be coming out next week.
Yep.
If you download the EG Tax app, there is a section on there where you can actually track all of your business mileage on our app. And so it's real easy. So you start it when you turn it on when you're, and it's linked to the satellite, right? So it knows exactly where
You turn it on your for your first lift. You turn it off when you're done,
Right.
And it will keep track of them
the
daily.
mileage.
You can also take pictures of your receipts for tolls or whatever, and it will put it right in your book too. So
that'll make it great. So at a tax time, you basically can move it into, if you use us, into our software, and it'll be all done for you. But it'll keep track of your mileage and all of your business expenses, and keep track of all your receipts as well.
I know I was just helping a gentleman the other day, and he was an Uber driver in New York City, and he didn't include all of his Uber income, and he received a 1099-K, and of course the IRS got a copy of that, and so they notified him that he filed incorrectly. I mean, it's just really important because the IRS will know, of this money that
And the
you're
other
making.
thing I want to mention is Jerry is self-employed, so the expenses for production of income are going to be deductible on Jerry's Schedule C. However, if you are an employee, you take your expenses as an itemized deduction. You'll not be able to take the expenses
If they change the law.
unless they come up with an adjustment. But right now, it looks like there is no deduction for employee business expenses. For Jerry, he's self-employed. The other thing that he should look into, especially if he's very successful, is maybe moving to an subchapter S corporation, because all the pass-throughs have a maximum of 25%. So I presume he would save money if he goes to a S corporation as opposed to being self-employed.
That's right.
Right?
Yeah. And I hope it's okay to chime in. There was a text message that I was cut off when I said about the Lewiston grand opening. It's January 13, and the Lewiston office phone number, if you have questions, is 272-2000, or you can call our office, and I can give you details at 632-7886.
Details, right?
Yes.
All right. So anyway, okay, Jerry, I hope we answered your question. Our app is going to be available next week, Chris?
Yep, hopefully by the end of the week, maybe we can be showing it off at the Financial Forum.
It has all kinds of stuff. I mean, it is so sweet.
Oh, it's Tim's great. Feels sorry. He was up at 2 a.m. He had to
England.
take a call from England and he was up to like 3:30
Regarding
dealing.
the app.
Yep. He said his dog was confused. He didn't know people are up and wait.
And they're doing work and
Yeah.
talking to people in England.
So anyway, look for the EG Tax app. It'll give you mileage deductions. It's going to do for your receipt, for your accounting.
We're hoping our
It'll
tax
load
software-
right into our software. It'll answer tax questions, let you make appointments. I mean, everything but come to dinner at my house. I mean, it is remarkable. So, all right, Jerry, thank you very much. I'm Esther Goulias, the tax lady from EG Tax, 8030930. 8030930, star 930 on your cell phone, and let's go to Gary in Williamsville. Hey, Gary. Hello.
Hello.
Hey, Gary.
Hi. So you had a question. I've been retired for a while collecting Social Security, and since I've got a part-time job for the last year and they're taking out Social Security from my paycheck, would that have any adjustment on my Social Security down the road, or is that money just taken?
Well, actually, they will increase your money that you're getting from Social Security if you're paying into Social Security. It's a very small adjustment. As a matter of fact, I got an adjustment the other day of $99.
Wow.
And so I work full-time, and I only got a $99 adjustment, but it was an adjustment in my favor. So, yeah, it will increase it, but very, very slightly.
Do they review that every year?
Yeah, they get your W-2 information, and they'll adjust it based upon the difference between what you withdrew and what you put in.
Gotcha. Okay, well, thank you very much.
You're very welcome.
And then don't forget you have to include that Social Security that you receive on your tax return, of course. He knows that, I'm sure.
Possibly.
Yeah, well, his wages and things like that.
I think aren't you retired, Gary?
No, he said
he's gone.
He said he had a part-time job.
Good.
He said he had a part-time job.
All right, and let's before the news, let's see other people that would be affected. Let's say you're a senior and you love to go to the casino, right?
Yep.
And it was pretty benign before. We would say to people, don't go to the casino because it makes your Social Security taxable. But at least on line 21 was the income as an itemized deduction. You were able to deduct your losses, not if they changed the tax law.
Right. No
So
more
you'll be
gambling
stuck
losses.
with the income on line 21, making your Social Security more taxable, and there's no place to deduct the gambling losses.
Gosh, I hope those casino owners are lobbying in Washington for this stuff.
So if somebody won $3,000 at the casino and they put all the money back into the slot machines, for instance, they'd end up paying an extra $570 in taxes.
Yep.
Because of the change in the tax law. So I thought it was really important for people to understand what really they're proposing. These are tax breaks for regular people, not just high rollers. People that make a lot of money actually lose their itemized deductions once their income gets over like $270,000. So this is not a big windfall a loophole for upper income people. It's also a loophole for regular people. Okay, let's take a break for the news. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side. This is WBEN. Tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and I'm joined in studio with Christopher Fabian, Tiffany Fabian, and we're talking about some of the proposed tax law changes, and certainly we're going to keep you abreast of everything, but you don't know if you don't know, and so that's what we're trying to do, is to let you get you in on what they're proposing. Primarily, they're talking about less tax brackets. Who cares about less tax brackets? The top bracket is coming down. Because many of us, let's face it, it's the computer that does the work. There's more tax brackets, less tax brackets, and the bottom went up 2%.
Right,
and your children are worthless. It used to be that if you had personal exemptions, it was $4,100. Now, you get nothing for having children, except for the child tax credit if the child's under the age of 17. So it'll be interesting what they actually come up with, because a family of four would have gotten an extra $16,400 in write-offs. They'll lose that.
It's funny, when this was all coming to fruition and it was all on the table, I was telling you were telling me, I said, we got to get the word out. But then you told me the national press has been doing a really good job, and people realize, and the media is talking about it,
Well, that's true, but people don't understand how their taxes work.
Right.
So when they talk about this being a big tax break, it is, but it's not for middle people, income people. Why don't we go back to the phones? 8030930, 8030930.
They hung up, unfortunately.
Okay. All right. And now, the other thing is, if you have not incorporated, don't you think at this point in time that people should look at incorporating because of the cap in, because I think that this part is going to go through, the reduction in the top rate to 25% on C Corps and 20% on S Corps. So if you have and I'm sure that they're going to be, graduated steps. It's not going to be a flat 20%. People should look at incorporating, right?
Definitely, and it all depends on your income too. Because if you're in the upper class, this is where the incorporations are going to help you. Because if you're in the 25% well, if you're in the maximum bracket, which is going to be 35%, it's going to tax you only at 25% for pass-throughs through an S-Corp, so it's going to save you money.
Right. But the thing is, it's going to be graduated, though, Chris. So everything's going to be, the first layer is going to be at a lower percent, the next layer is going to be at a lower percent. So if your corporation is making $100,000, for instance, your self-employment is $100,000. If you move to a S-Corp, if you don't, and again, this is everything I'm reading between the lines. If you don't move to an S corp, it looks like you could pay at that 35% bracket. But if you move to an S corp, it'd be at 25%. So you want to talk to your accountant, and that's something that we can help people do. We can help them incorporate, right?
Definitely.
That's what we do.
That's part of what we do. So, and again, all you have to do is call us Monday through Friday, 632-7886.
And then don't forget, we've been getting a lot of calls at the office about your FAFSA form. So now is the time to get your FAFSA form in, and they use your 2015 income. So if you need help filling that out, we've been doing that at the office a lot lately.
And the other thing is, let's talk about the STAR exemption. People need, this is very important. If you bought your house, this last year, 2 years, right?
Mm-hmm. Right. Yep, the last 2 years, you got to...
So explain to people where they go to get their STAR money.
You have to go online and you register through New York State that you purchased a new house, and then you don't get the reduction in your property taxes. You will get a check in the mail eventually for your STAR rebate. Now, if you're already in the STAR program, there's nothing you have to worry about. Everything will still stay exactly the same. So you'll get the reduction.
So if you haven't, it's people that have purchased their home within the last 2 years.
Correct?
So if you purchased your home within the last 2 years and you think because you had a STAR rebate before that you're just going to automatically get it as a reduction in your property taxes and your school tax bill, that's not correct, right?
Correct.
So where do you go to register for the STAR rebate?
You go to New York State's website and you search the STAR application, and it's a simple 2-minute form. You enter your name, your address, and your Social Security number.
But if you don't apply,
you don't get it. Yep.
Well, they probably hope you don't apply.
Really important. Want to let people know that, too. I'm Esther Gilius, the tax lady from EG Tax, 803-0930. 803-0930, star 930 on your cell phone, and we have Linda. Hey, Linda, how can we help you, my dear?
Oh, hello, everybody. I have a question. Each year, I get, from New York State, I get a tax refund. I don't pay any taxes, but I fill out a New York State and federal to get this tax refund.
Are you working, Linda?
No.
It might be her property credit.
Right, that's what I'm saying.
Yeah, her property credit.
So your real property tax credit.
Going to be in?
Yep, I have the pleasure of doing Linda's tax return. Hey, Linda.
Hi.
Yes, so she qualifies.
Yeah, that's a New York credit. That will stay in. That's not getting cut as far as New York hasn't come up with anything yet that they're getting rid of or changing anything.
Oh, good.
I know. Thank God.
So let's explain what the real property tax credit is.
Love the show.
Thanks, you, Linda.
Thank you.
Thanks, Linda.
So if you want to explain what the real property tax credit is?
Yeah, that's a credit. I'll do it. If you're a homeowner and your house is worth less than $85,000, you could be entitled to a little bit of a rebate through your tax return. Or if you are a renter and you pay less than $450 a month, then you could also be entitled to this little bit of extra savings.
And in Linda's case, she's a homeowner, and so she fits the first scenario that you talked about, Chris.
Well, also, and you don't have to file a tax you don't really file a tax return. You can file this they call it renter's rebate, independent of the tax return. Correct?
Right. You can file the IT-214 by itself.
Right. So, if you're somebody that doesn't have to file a tax return, your house is worth less than $85,000, or you're paying less than $450 in rent, this renter's rebate might be available to you. So they actually pay you money for when you didn't have to file.
And Linda asked a really good question. What, these tax changes, what is it going to do for New York and all the other states that you live in?
And that's another thing, is New York State and the federal kind of piggyback on one another. The standard deduction on New York State is $13,000 if you're filing a joint return, okay? They don't give much for dependents anyway in New York State, but if you're somebody that was able to itemize before to take the advantage of some deductions, New York State allowed you to itemize. Well, since there won't be any itemized deductions, really, effectively, that means that you won't be able to itemize on the state, which would mean you'll pay more taxes on the state as well.
Mm-hmm. Exactly.
Right? But like they say in the national news, just because New York State is badly run doesn't mean that that everybody else should subsidize them. That's So when you're thinking, so you as a taxpayer in New York State have to think, wow. That's unbelievable. All right, let's see. All right, health insurance. That's another thing I want to talk about. This is now, like Tiff, you were saying, it's open enrollment.
Right, till December 7th.
Or if you're a senior at 64 and you're getting ready to go into Medicare, and you have to choose, I think that's what our commercial says, you got to choose from one of these insurance policies. That's something that EG Tax will help people with, correct?
Most definitely. We'll take the time and sit down with you and figure out, do you need a heavy prescription plan? Do you need a heavy doctor plan? Do you need a combination? Because, like you said, you don't want to pay for a car and just have it sit in the driveway. You want to make sure.
And the thing is, there is no charge to the consumer. So that is something that EG Tax has been doing for a number of years, especially when Obamacare came into effect, because we felt so bad having to tell people that they were going to get penalized, and we wanted to help them to get the best insurance possible. So in that tradition now, as a Medicare person, somebody going into Medicare, you don't know what to choose. Don't just choose a pig in the poke. I'm going to tell you, some of these policies don't cost anything and will give you everything that you need. So you can call EG Tax for that, and we'll be very happy to help you with that too. Right?
Correct.
All right, let's go back to the phones and talk to Jackie. Hey, Jackie, how can we help you?
Hi, Esther. Hi, everybody.
Hello.
I received a house from an estate, my mother's, and the lien was switched over about a year and a half ago. Can I get the STAR program, or can I see if I qualify? Or
do you live in the house, Jackie?
I moved there with my daughter so she could go to high school there.
Okay, so this is your personal residence, correct?
I had another home, but my husband stayed there, and I moved out there with her.
Are you separated?
Well, we were, because the school was better out there. So
right, but are you legally separated?
Not legally, no.
Is your name still on the property where your husband lives?
Yes.
Then no, you can't.
Right, because there can only be, if you're married filing a joint return, there can only be, or even if you're married separate, you can't double dip. Both of you can't get the STAR exemption.
So I could file married filing separate, because I'm thinking about.
No, both of you can't. If you're married and he's getting the STAR, and
your name is on
and your name's on the title of the other house, you can't do it.
Oh, okay. Thank you.
All right, thanks, Jackie.
But you can take both property taxes.
Oh, yeah.
Yeah.
Well, I mean,
for now.
Right now.
Yeah.
Through, it looks like 2017. And then we'll get everybody up to date so they know how to move forward in the future, right?
That's right.
The other thing is we talk about, nobody's talked about, is there going to be any head of the household anymore?
Right.
It
right.
doesn't sound like.
Yeah, they're only talking about single and married.
Single or married filing a joint return. So the extra standard deduction for being head of the household or for being qualifying widower looks like it's going to be gone. So again, all of these things, all these little tweaks means you're going to pay more, because the standard deduction for being head of the household was substantially more. It was over $9,000.
You said it well, Esther, a few weeks ago when you said it's like stripping the income away from the backbone of the Americans, the taxpayers. It just seems illogical to me.
And all right. And so if you have large medical bills, if you pay large property taxes, state of New York taxes, sales taxes, interest on your mortgage unless it was very, very high. Charities, again, unless it's very high, all these miscellaneous itemized deductions will be gone. So if you're paying for health insurance, dental, glasses, prescriptions, nursing home, medical adaptations, appliances, psychiatric, they just won't allow you to take it anymore. So you just have to really make sure you talk to your representative and your senator. I know Schumer, who is a Democrat, and I'm not known for being a Democrat, but I will tell you, for people in New York State, I really feel bad for them because the top rate is going to save a lot of money. Now, the good part is the repatriation of income, income coming in from foreign nationals that were doing business outside of the United States, bringing money in. That's a good thing, and that's great for business. But I think as long as they're trying to make everything revenue neutral, it's very difficult because they're basically balancing the budget on the back of people that are middle-income taxpayers, right?
Yep.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break, and we'll be back with your phone calls on the other side. Hey, I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 on your cell phone. And did I get yelled at for stepping over you while you were explaining about Lewiston?
Oh, that was a long time ago. But someone just asked, why are we using 2015 for FAFSA? Well, a couple weeks ago, FAFSA switched over to 2018-19, which means you have to use your 2016 tax return. They're 2 years behind. So FAFSA and the Excelsior program are 2 years behind. They changed that a couple years ago. So you have to use your 2 years ago plan taxes for your financial aid.
Why do you think that is?
Because before, everybody had to rush in and estimate what their tax return was going to look like. And I guess a lot of people did it wrong, and it got changed, so that could have screwed up their financial aid.
Okay, so let's go back. All right, some of the other things that are changing is gifting exemption is slating to increase this year to $15,000. So now you can do a gift up to $14,000 per person per year and not have to file a gift tax return. The projection is it's going to be $15,000 per person per year. But since they've gotten rid of the estate taxes, if this is what goes on, then it doesn't make any difference anyway because there are no estate taxes unless you're in New York State. Because New York State has not gotten rid of the estate taxes.
Yep. And if
you have to be very careful when you're planning.
Right. And if you're giving the money, people are always afraid, well, if I give the money, does that person have to pay tax on the money that I'm giving them? No. The gift tax is just a simple information form to the government saying you're giving money and no one owes money at all.
All right. Well, let's go back to the phones. And Kathy, how can we help you, my dear?
Hi, Esther and Company. Just calling to find out a little bit about sale of a primary residence.
Okay.
Mother-in-law has been widowed for 2 years and moved out of her primary residence and is living with a relative. My question for you is, when she sells her house, will there be a tax bill?
Okay, so in order to take, a lot of people aren't aware of this, but the first $250,000 of gain, if you're single, and I'm assuming that she's single, is tax-free if you lived in the home as your primary residence 2 out of the last 5 years. So if she sells this home in a 5-year period and she lived in it for at least 2 out of the last 5 years, she'll be able to exclude up to the first $250,000 in gain.
Okay, got it.
So tell her to put the pedal to the metal.
Yes, she's got to do it now.
Yeah, because she's kind of running out of time.
Right, got it. Okay, thanks very much.
You're very welcome. Okay, and let's go to another Kathy, right?
Yep.
That's right.
Hey, Kathy, how can we help you?
Yes, Esther, thank you for taking my call.
Yeah.
Can you tell me when we should be receiving the STAR check?
Okay. Did you just buy your house within the last couple of years?
No.
All right. Are you on Senior Star?
No.
So when did you buy your house?
Oh, 10 years ago?
Okay.
So that star exemption is on your school tax bill already.
And you won't be getting a check.
Oh,
Only new homeowners in the last 2 years.
I see. Okay.
Okay, now have you signed up for it in the past, correct, at where you live?
Yes, I did.
Okay, so when you take a look at your tax bill, it should be on there. If it isn't, you want to make sure you talk to your municipality. But this change in the way that people are getting the star exemption are really just for people who have purchased a new home. I don't mean new, a home that they are using as their personal residence in the last 2 years. That's where you have to go to New York State to register to get the star money.
And Esther, I was going to tell you, you might want to tell your friends and relatives from out of state when they talk about New York State taxes to keep in mind that New York State is actually a donor state to the federal government. And a lot of the southern and western states are not, so they're really benefiting
from New York State.
The thing is, let's face it, it's politics. So the politicians are selling a program, and so they're talking obviously that New York State is not a Republican state, and it's high tax state, and they say that's wrong to subsidize people. Unfortunately, if you're somebody that lives here and you're paying the taxes, it's been a tradition that you were able to deduct the property taxes and all your miscellaneous itemized deductions. So it's really it's a political thing.
They're being salesmen.
Enough politics, right?
But I think the public, our New York State people, should realize that we are donor states, so we are contributing more to the federal government than most other states in the country. So therefore, they should, like you said, contact their local.
I'm telling you, when people find out what's going to happen, they are really going to be shocked.
Yes.
So I'm doing the very best I can without getting political. I certainly don't want to get political, but it is not good for the average New Yorker.
No, it isn't. But thank you so much for bringing this to people's attention.
Well, thank you so much.
Thank you, Kathy.
I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930. Now, who's the next up on our hit list?
Joe.
Hey, Joe.
Yeah, it's just me, Joe.
Me, Joe. Hey, Joe, how can we help you?
Hey, Esther, I always like your show. I got a question for you. Your associate there, he touched on that FAFSA form, the college forms.
Yep.
Those things are really confusing. Now,
well, EG Tax will prepare those for you at no charge. So if you get stuck, come on in and we'll help you.
Yeah, I'm going to do that. My thing is did I hear him correct when he said they go back 2 years?
Yep. 16, right, Chris?
Yep, the new ones that just came out a couple weeks ago.
October 1st.
On October 1st, you have to use your 2016.
Okay. Now, what is deductible, like if you're footing the bill for your kids to go to college?
All right, presently,
that is?
There's an education credit, which would be the
AOTC.
Right, American Opportunity Tax Credit, which is a substantial credit. So it's a credit of up to $2,500 in the federal, up to $400, a little over $400 in New York State. So that's good. That's a wonderful thing. That is still staying in as far as I've seen.
And what's deductible is tuition and supplies. Joe.
Right.
Yeah.
Well, the maximum is $2,500 federal.
Yeah.
Right. So those are 2 credits, and so as your child goes to college for the first 4 years, that credit is available. Then the lifetime learning would kick in after that for the balance of their college, their college years
career.
after that. So those credits are still in place.
Yeah, because I'm going to have a couple of kids in college, and it's. I've been just paying as I go, so...
Well, that's great. Then they won't end up with any debt. And it's up to $2,500 per student.
For the credit.
So it could be $5,000 plus for your...
Hello?
What, Joe? What was your question?
Did you say $2,500 per year per student?
Per year, for the first 4 years of higher education.
Right on your tax return.
Right.
Oh, okay. Yeah, it's all of that. Per student.
Yep.
Okay, well, it's percentages. You know how the tax law goes. You take this percentage of that. But the maximum, it's a credit. Maximum up to $2,500 per student.
I could get that done when I get the income tax done.
Yeah, we'll take a look at it for you, okay?
Yeah. Thanks a lot.
You're welcome.
You know, and going back to tax changes, if they get rid of the 401k deduction to reduce your tax, that's going to hurt their FAFSA applications.
It'll hurt people like crazy.
Yep.
Yeah, because everything's based upon adjusted gross income. So if your adjusted gross income goes higher because they won't let you take the 401k deduction,
good point,
it
Chris.
messes you up on the credit.
Yep.
Yeah.
I mean, everything is interrelated in taxes, right?
Yes.
Okay, let's go back to the phones. We have Chris?
Gene from Williamsville
Hey,
first.
Gene, how can we help you, sir?
I have a question. I just went back on active duty with the Navy.
Thank
you for your service.
Oh, my pleasure. I'm living in D.C., purchased a condo in D.C., but we still have our house in Williamsville.
Okay.
My wife's a school teacher, so she lives here during the year, and I live in Williamsville. When we're filing our taxes for this 2016, would it be advantageous for each of us to file separately as head of household, me in D.C.?
I think you should do married filing separate on the state only.
Yeah, see, the thing is, head of household status, it was for people that maintain a home for a qualifying individual, okay? So you would have to have a child or a qualifying dependent living with you to be head of the household, okay? And you would have had to not live with your spouse
for the last 6 months.
For the last 6 months. So that would be the criteria. Do you have children living with you?
No, our youngest one's in college, and the other three are gone.
All right, so you wouldn't be able to file head of the house. You're going to have to be married filing a separate return.
But I think from experience that you should do married filing joint on the federal and married filing separate on the states, and it's something that we should look at. But that's what I think from my experience.
Okay.
Okay.
All right,
Thank you, Gene.
Thank you for your service.
Let's squeeze Chris in here quickly. Hey, Chris, how can we
Nope,
help you?
they got him locked up. We can't get to him.
Because the
time's running out.
Look at during the week, if you need any help, EG Tax is your answer. Go to our website at egtax.com during the week. And by the way, I'll answer all your tax questions immediately. If you need us during the week, you can go to our website, get our phone number. And again, next Saturday, we'll be with the financial guys at that super forum. And if you want the best help, come on out to our forum. We'd love to meet you. Until next week, I'm Esther Golias, the tax lady with Christopher Fabian, Tiffany Fabian. Have a great week. God bless you.